The future of money isn't paper, it's pure control. And you'll never believe who's pulling the strings. Spoiler alert, it starts with black and ends with rock. This isn't just another tech shift. This could change everything about how you live, work, and spend. If you think that sounds extreme, just look at what's already happening in China. Their digital currency is tied to a social credit score, where everything you do can influence how you're treated in society. In the West, we're heading down the same path. And after the recent news from the EU, we're diving into central bank digital currencies, CBDCs, and stablecoins like USDC and Euro, which are taking over the financial world. But here's the twist, the people behind these digital currencies might shock you. What does that mean for you? Well, everything. The way you spend and save could be under more control than ever. Who really owns stablecoins? For some context, let's take a look at two of the most popular stablecoins, USDC and Euro. These are digital versions of the US dollar and the euro, and they've exploded in popularity. After Europe passed the MiCA regulations, these became the most compliant stablecoins on the market, making them the go-to for global transactions. But here's where things get interesting. Circle, the company behind USDC, received a massive $400 million investment from major players like BlackRock and Fidelity. BlackRock doesn't just manage investments anymore, they're managing the cash reserves behind your digital dollar. In fact, BlackRock manages the Circle Reserve Fund, a bespoke government money market fund that invests in short-term U.S. Treasuries and overnight repo agreements. Does that sound decentralized to you? It's not. Jeremy Allaire, the CEO of Circle, even said digital currencies like USDC are fueling a global economic transformation. They make it sound like a good thing, but it's the complete opposite of the original vision behind Bitcoin and crypto, which is true decentralization. While stablecoins do offer some benefits, cheaper, faster transactions without borders, and even the option for self-custody, you need to take that with a pinch of salt. Why? Because this innovation comes with the risk of control shifting into too few hands. When you dig deeper, you start to realize that these stablecoins, supposedly offering decentralized stable value, are actually in the hands of some of the largest, most centralized institutions in the world. Companies like BlackRock are controlling the reserves, raising a critical question: who really owns these supposedly independent digital currencies? Stablecoins like USDC and Euro might seem like a tech innovation for Wall Street, but they could end up in your wallet tomorrow, whether you like it or not. Your digital dollar is now backed by institutions with the same centralized power as the traditional financial system. In fact, BlackRock's fund, registered with the SEC, aims to eventually apply to the Federal Reserve's reverse repo program, which could give them even more influence over your digital money. Is this the transformation we were promised? What does it look like when your digital dollar is managed by financial giants? Maybe it's tighter restrictions on how and where you spend or higher fees, just like we're seeing in the traditional banking system. This raises an important concern: who's really benefiting from this shift? These big players hold the keys to something that's meant to be decentralized. And as stablecoins continue to grow, so does the influence and control of financial giants like BlackRock. So, now we're at a crossroads. What does this mean for you and your financial freedom? If control of stablecoins shifts more and more toward these massive institutions, it might just be a repeat of the centralized system we were supposed to move away from. Now, before we move on, if you're looking to stay ahead and really understand this evolving crypto space, I highly recommend checking out learningcrypto.com. It's our education platform, built to help guide you through your crypto journey, no matter where you're starting from. We've spent years in this market, learning what works and what doesn't, and we share those insights with you. So, whether it's market trends, where things are headed, or even what we hold in our own portfolio right now, you'll find it all there. How USDC can become a CBDC. The European Central Bank, ECB, is already working on a digital euro. It's no longer a question of if it will happen, but when. The ECB has made it clear that they want Europe to move away from dependence on foreign payment providers like Visa, MasterCard, and even platforms like Alipay, which dominate the market. In fact, Fabio Panetta, a member of the ECB's executive board, recently said, "We need our own strong digital payment system." We can achieve this by bringing central bank money into the digital era with the introduction of a digital euro. While they promise benefits like free payments and a more secure infrastructure built within Europe, there's still an important question about privacy. They assure us that privacy will be prioritized, that only pseudonymized data will be used, giving it cash-like privacy. But the major fact they leave out is that they hold the keys. They could de-anonymize this data at any moment they want. As Panetta put it, we owe it to Europeans to do better. But does better just mean more surveillance in disguise? How is this related to USDC and Euro? The way these stablecoins are both integrated into existing financial systems and aligned with all regulations shows how easily private stablecoins could evolve into government-backed CBDCs. The technology is already there. BlackRock is trying to move toward the Federal Reserve, and Circle has full control over the smart contracts for their stablecoins. They can be frozen at any time. This is a truly dangerous time we are living in, and your privacy is coming under attack. Many people won't even realize what's happening. Imagine governments using CBDCs for financial surveillance. Just look at what's happening in China right now. Every transaction you make, every coffee, every rent payment, every online purchase, could be tracked. Sure, they'll promise security and all these other benefits they claim are for you. But the real issue is, what happens to privacy when every cent is monitored? Think about it, a centralized entity controlling the currency and tracking transactions. Does that sound like freedom to you? While central banks claim CBDCs will use pseudonymized data to protect privacy, the truth is, with the right keys, your identity can still be revealed. It's like locking your door, but the government has a spare key. Compare this to truly decentralized cryptocurrencies like Bitcoin, where no one can control or track your spending habits in the same way. The ECB has stated that the digital euro will offer more privacy than commercial payment solutions, but even they admit that data will only be pseudonymized, not fully anonymous. Protect your privacy. Privacy starts with you. One of the simplest ways to protect it is by using a VPN. If you're looking for something straightforward, Mullvad is a great choice. It doesn't even ask for personal details. For a full privacy suite that covers everything from secure email to cloud storage and a VPN, check out Proton. They offer end-to-end encryption with a strict no-logs policy. Now, two stablecoins I'd like to focus on are DAI and GHO. DAI, one of the most well-known decentralized stablecoins, now has a counterpart called USDS. Governed by MakerDAO, it's backed by a variety of crypto assets rather than fiat currency. DAI holders can even receive yield on their holdings, though this comes with additional risks. GHO, created by Aave, offers a new alternative but is still in its early stages. Both DAI and GHO offer something that USDC and Euro cannot: decentralization and privacy, keeping power in the hands of users instead of institutions. In a world moving closer to CBDCs, that control could make a huge difference for your financial freedom. If you want to elevate your understanding of crypto, don't forget to check out learningcrypto.com. We've been in this space for over a decade and have a lot of free content on the site. We also provide extra insights to our members, helping you along your path. That's all for this video. Let me know if you found it useful in the comments below, and thanks for watching.